Before I get to tech, you did point out a few weeks ago that you thought we broke our addiction to Fed commentary and speculation. You thought that was healthy, although it doesn't sound like you think that's going to last.
I think for the last few years, it's not just the last year, I think this fixation on what the Fed will or will not do has distracted us from the fundamentals. So from that perspective, I think the less talk there is about the Fed, the healthier the market becomes.
That's unlikely. I guess, is that a function of the volume of Fed commentary, or is the market just primed for that no matter what?
It's the delusion that the Fed sets interest rates that drives me crazy. I mean, the Fed influences rates, but it doesn't set rates. And I think as long as we believe the Fed can do whatever it wants, our investing is going to be, we're not going to invest based on what really matters.
All right, so that brings us to tech and what Nvidia told us this week. And I guess the degree to which some argue they either sucked oxygen out of the room or fed the room oxygen. What's your general take on the space?
I think it's a testimonial to the power of momentum. I mean, right now the momentum is clearly with Nvidia. They can do nothing wrong. Everything they touch turns to gold. And we've seen this with other stocks before. We saw the Tesla in 2020. We saw it with Facebook and Google in the middle of the last decade. When the momentum is with you, nothing can stop you. And right now, the momentum is with Nvidia, and it's carrying it forward. But if you look at the numbers themselves, the question you got to ask is, what are people measuring these actual numbers against? What are those expectations? Because right now, those expectations seem to be whatever we do, Nvidia will beat it.
Well, I mean, when you talk about the momentum when it comes to Nvidia, the momentum is actually in its business, right, in addition to it being in its stock. And so it seems as if, you know, the market has been sort of dragged higher in terms of how much they can expect in revenue and earnings growth going into next year based on the order book and based on what they say about demand over supply. To me, the interesting question is, at $2.5 trillion of market cap, what is the stock discounting at this point in terms of longer-term growth rates?
That's really the question. When all momentum has its source in something solid, in this case, Nvidia's earnings and revenues have blasted through the roof. That said, though, at a $2.5 trillion market cap, you're building in an expectation that either the AI chip market is going to be $1 trillion, which it's not going to be. There's no way that the chip market alone, the AI market might be 2 or 3 trillion, but the chip market cannot be that big. Or you're building in the expectation that Nvidia is going to find a couple of other really big markets to conquer over the next decade. Either way, I mean, it's clearly a possibility, but is it plausible? I don't think so.
Outside of AI, Aswath, how do you perceive the valuation gap in the private markets versus the public markets? We're hopeful and waiting the potential for some IPOs this summer, hopeful from the standpoint of activity down here at the NYSE perhaps. But we keep hearing instances that there's this gap between the valuations that the companies looking to go public are looking to get versus what the buy side is willing to pay. How are you kind of observing this dynamic?
I think there is a gap between not so much public versus private, but money-making big tech companies and money-losing small tech companies. While tech has gone up a lot over the last year and a half, much of it has been at the top of the ladder, the large market cap money-making tech companies. And part of the reason I think we're not seeing the IPOs that you'd expect to see when tech is doing well is because of that disconnect. That disconnect might disappear if the market keeps doing well. But for the moment, I think that's what's separating the two.
And I guess I just want to drill into the Nvidia point. Just one more thing, because people keep saying that, you know, the stock is cheaper today than it was 2 years ago because earnings estimates have come up so much. It's a company with like 80% market share, 75% gross margins. And one of the skeptical takes is that just both are maxing out right now. In other words, returns that high will inevitably draw a lot of better competition. So I guess the question is how we handicap that dynamic.
I think Nvidia is going to beat expectations in the short term because everything is based on 1 year revenues, 1 year earnings. The question is there enough boost, enough size in this market to keep it going as long as it has to justify the market cap? That's where I'm holding back because I think it will continue to beat expectations in the next quarter, maybe the next couple of quarters. But I think that's, you know, there's a long-term game and a short-term game, and it depends on which one you're playing with Nvidia.